If you want to get filthy rich in crypto this year in the 2024-2025 bull run and probably future bull runs as well, this is a framework for how people got incredibly rich in 2021. It's basically a framework that's going to help you invest into a layer 1 or even a layer 2 solution and leverage that chain with the DeFi on the chain. Specifically, we're going to talk about DEXs in this case, decentralized exchanges. So this framework happened in 2021. A lot of people made a lot of money, and we shouldn't forget it. We should adopt it and use it in this cycle to our best advantage so that we can make millions of dollars with the easiest trades possible. So this is a very simple framework that can make you hundreds of thousands or millions of dollars if you pull it off correctly in the right ecosystems and in the right timing. So we're going to break the framework down, and then I want to show you a real life example of how I'm using this framework right now in the Alephium blockchain, the Alephium L1, and the pair is going to be Alephium, and I'm swapping it to Ayin, a decentralized exchange on Alephium. So that's how we're going to break this down. We're going to show you the framework. We're going to show you how it's being applied in real life. So the system is basically, if this L1 or L2 does well, then this DeFi token will have a good potential to do well. This is what happened last cycle in 2020 and 2021, and I know a lot of people think that crazy stuff happened in 2020 and 2021, which it did. It did happen. We had a lot of NFTs go for a lot of money and all this stuff. There was gaming and metaverse and all that. But I have a feeling a lot of that stuff's going to come back around. I've already seen new NFT projects iterate and come back around and start to build up this year in 2024. And so NFTs will come back around. These strategies will come back around. Meme coins are going to come back around. All this stuff is coming back around. And 2025 will arguably be a bigger bull run than 2021. Every year, every cycle, it should get bigger and bigger. So if your L1 does well, if you believe in your L1 and you have good fundamental analysis on the L1, then there's no reason that your DeFi ecosystem on that L1 should not grow proportionally or greater than the L1 token itself. So we saw this in 2021 with Ethereum. Ethereum did incredible in 2021, but Uniswap and Aave, they ran so hard. People made money on Ethereum, swapped it to Uni and Aave, and made even more money. Same thing with BNB and the Pancake Swap token Cake, Solana and Jupiter, and we even see this in the S&P 500 with things like Tesla, Apple, and Nvidia far outpacing the total S&P 500 fund. So when you think about something like an Ethereum or a Bitcoin or a Solana or a BNB, these are like the S&P 500, and then the DeFi projects on top of it are like the projects or the companies in the S&P 500. That's a good way to look at this. There's a 5-step plan we're going to do in order in this framework to get you these results that you want to get. The first thing is fundamentally analyze and determine good L1s. This is highly subjective depending on what you think makes a good L1 or a bad L1 or things you want to see in a blockchain. You need to know what is important to you. For me, the reason I'm in Alephium or Cardano or Bitcoin is that I like tokens that have a good use case and a good reason for being. So I'm in Cardano because it's got a lot of security, a lot of cap supply, a lot of retail friendly stuff. I own Ethereum to counter my Cardano position, and it's a totally different thing. Accounts-based model, inflationary, deflationary, which has done very well at being deflationary, and largest smart contract platform in crypto, right? So it has great network effects. So I do a fundamental analysis based on what I like. I like Alephium because it is a combination of Cardano and Ethereum. Very interesting to me. So do a fundamental analysis and find good L1s that you like. You can go to the L1 section of CoinMarketCap and just scroll down the list and see what you like, right? Figure it out and dive deeper into it. The second step is going to understand the historical reasons how people made the most amount of money on L1s and L2s. Yes, they made a ton of money just by buying Ethereum, just by buying Cardano, just by buying Alephium, just by buying any L1 or L2. They did make a lot of money. But some people took that money and leveraged it into DeFi to make even more money. So this plan is step number 2. We're understanding how it happened and how we can apply it this cycle. Third step is going to find DeFi tokens on your L1. In my case, for this video, it's Alephium. It could be Cardano, Solana, Ethereum, anything. So find DeFi tokens on your L1 that meet your investment criteria. So what makes a good DeFi token? We talk about this. I talk about this a lot about what I think a good DeFi token is. I have my own set of criteria. It's a combination of fundamentals, tokenomics, branding and lasting power, and the chart, right? So there's a bunch of things that go into it, but you need to figure out what is a DeFi token. What does a good DeFi token look like that when you see that, you're like, that's a good buy for me. I believe in that product. And I think a lot of things are lining up, right? That's what you want to be able to answer in number 3. Then number 4, you're going to swap your L1 token for the DeFi token at optimal price levels. So you need to have a strategy for understanding the chart, getting good buy times and sell times, good positions, and trying to figure out where this price is going. So you need to understand a little bit of trading to do that in order to have an optimal price target, and you need to understand market cycles. So this could be your swapping Ethereum for Aave, right? Or you're swapping Sol for Jupe, or you're swapping Alephium's ALPH token for Ayin, which is the DEX token, right? Fifth is wait for the bull run, where DeFi makes more gains than the base L1. Initially, in a lot of bull markets, the L1 is going to run a little bit faster. Or at the beginning of the bull market, it's going to take charge and run. But there will be, whether it's towards the middle or the back half of the bull run, DeFi will take off. And it's for a couple reasons. We wrote it down here. In the theory, the bear market is that the DeFi tokens suffer more than the L1 in the bear market because they're inherently riskier. This makes them undervalued compared to the L1, and then when the L1 comes back in the bull market and people buy into it, then they naturally make a little bit of money on the L1 or want to get into more levels of risk or better projects on that L1 that interest them. They find a way to move their money deeper into the ecosystem as they're sold on the ecosystem. Then, as all the bull run prices start going up, people are just going to start FOMOing into DeFi projects instead of the L1 because they want more gains, right? But they're already late to the party, so there is no more gains, right? They're just going to have normal gains. But people will either rotate gains into the DeFi ecosystem or they're going to join and go straight into the risky investments. But DeFi gets undervalued in a bear market. A lot of crypto gets undervalued in a bear market. This is why we have an opportunity to invest with this plan. Now that we showed you the theory and the plan and the proof, this is how I am applying this strategy in real life. I went out and I found an L1 that I like, Alephium. It has a stateful UTXO. You should go read about it. It's like a combination of Ethereum and Cardano. It has a lot of things that I find really interesting in crypto. And so from there, I've dove in deeper into the Alephium ecosystem. And on Alephium, DeFi is pretty new. It's a relatively new blockchain, kind of came out in 2022, same time as Caspa. And it just doesn't have a lot of DeFi infrastructure, not a lot of NFT infrastructure, not a lot of stuff going on. It has one major decentralized exchange, and that's Ayin. And with Ayin, we have the Ayin token, this right here. What this chart is going to show me is when should I swap my Alephium to Ayin? Now, I've already swapped some Alephium to Ayin to secure a great price point. So that's, a little safety measure I've done for myself. But when is the optimal time to turn the majority of my Alephium into Ayin? Because if I'm going to be in this risky L1, I want to have the most risk and I want to be invested into the major decentralized exchange and the only decentralized exchange that's on the platform. So my theory is people who get into Alephium, start making money, they will naturally filter into DeFi. There's not a lot of tokens in DeFi on Alephium right now to invest in. So my theory is Ayin will be the one that people will invest into, and it'll have outsized returns. And we've seen that in the past. So this chart gets a little weird, so I'll let you know if it does it, but this is what Ayin has looked like. Let me switch it to Ayin ALPH. So currently one Ayin is trading for 4.8 ALPH. And ALPH is the native token of Alephium. Ayin is the native DEX token on Alephium. So we're going to go down to the 7-day chart. I like to zoom it way out here. I don't really care about volume, but this is what we're looking at. So we've seen that in the past history in 2023, this token has done really well in a bear market, which is always a good sign for me. I like to see that when a token has good fundamentals and is rocking an awesome chart in a bear market. That makes me think it's time that, this is just a down period. And if the project has good fundamentals, which I suggest you to look at Ayin and look at Alephium before investing into them. But I personally think they both have good fundamentals for what they're providing to the crypto world. And a part of my larger portfolio, I got Bitcoin, Ethereum, Cardano natives, and Alephium natives now. I think this is a great asset into my portfolio to give me some more risk, which is what I want. So the reason I think that this is so good and that this theory that's up behind me on the board that we just talked about is powerful is because we've seen this token perform well, and now it's in a downtrend, which we can take advantage of. I'm ready to deploy this strategy. I'm just trying to figure out when is the best time to make the swap from Alephium to Ayin. So by looking at this chart, I can give you a good indicator of what I'm looking at here. We're going to toss on a MACD. We're going to toss on an RSI. Really simple stuff. And when you zoom out this far, everything can be pretty simple and we can get a good estimation of what's happening. Again, these are very small niche cryptos where it's not like giant whales trading and not all this crazy stuff. That doesn't really happen here. This is just normal people trading and normal retail investors getting in early. And what the chart is telling me here is that there's still room to the downside. The momentum has not shifted, and Alephium can still go up while Ayin relative to Alephium goes down or maintains the same. And so what we can also toss on a little Fibonacci retracement, like all your simple stuff. And we can see some great price levels where if this MACD starts to curl, if the RSI starts to bottom, it could be here at the 618 at about 4.3 ALF, or it could be down here at the 786 at 3.04 ALF. So these are the two targets I'm watching based on this strategy, and this is how I'm deploying it. It doesn't have to get more complex than this. I think Alephium does well. I've done the analysis. I think Ayin is a good project on Alephium if I have to pick one to invest in. I've done the analysis, and now the chart is telling me to just sit back and wait and let the patience occur and let the tide occur. And in due time, this Ayin price will slowly bleed against Alephium, much like altcoins bleed against Bitcoin. And then I will have my chance to swap my Alephium for my Ayin and make a massive profit to the upside. It sounds too simple, but remember, do not make these things too complex. That's probably one of the worst things you can do is overtrade, get emotional, and think it has to be harder than it has to be. It does not have to be harder than that. This is really as simple as it gets, and it all comes down to understanding what you're investing in and why you're investing into it. So this is the theory and the strategy and the plan that I'm doing with Alephium and Ayin, and I think you can apply this to any blockchain. You can apply it to Cardano, Ethereum, Solana, Alephium, or any L1 or L2 that you like. It could be a brand new one. So I just want to share this strategy, this plan, this framework for investing into some tokens, because what has worked in 2020 and 2021 will probably still work in 2024 and 2025. I know we like to get very far ahead of ourselves, but like there's no major metaverse gaming that's going to rock our world this year. There's no, there might be some awesome NFT projects, but the DeFi tokens did really well last cycle, and I think they'll continue to do really well this cycle. There's no reason that we've saturated the DeFi market or that people are over DeFi. DeFi is a fundamental aspect of crypto. I think it's a great spot to be in, and this is how I'm deploying this plan. I'd be curious to know if you agree with the plan. What do you think about it? Let me know in the comments, but this is a small basic video on a simple framework I'm using to leverage L1 tokens and L2 tokens and make more money with DeFi, all right? Let me know in the comments if you agree, if you like this plan, if you hold Ayin or Alephium, and we'll see you in the next one.